We're back on Morning Trade Live. Uber will be in focus tomorrow morning when the company reports her earnings before the open. The stock is up more than 60% this year and is trading just 5% below its all-time high. So let's just take a look across the ride-sharing space and some of these other names across the sector. Of course, we do have Uber coming out tomorrow, as we just mentioned. So it's up 0.7% right now. Lyft is doing a similar thing. You've got Instacart just on the line to the upside, and DoorDash is lower by 3.3%. So it's a bit of a mixed picture across this space right now. So let's go inside out on Uber ahead of that earnings report. Joining us now is Eric Clark, portfolio manager of Alpha Brands Logo ETF. Thanks so much for joining us, Eric. What are your expectations for this report card from Uber?
I think probably more of the same. I mean, Dara's got this company firing on all cylinders, and they have good growth in delivery. They have good growth in mobility. So, you know, we expect to hear obviously more about autonomous and their participation there. So, I mean, the market's consolidating at all-time highs here. The stock of Uber is consolidating a little bit after a big run. So we don't really worry too much about the quarter as much as just, you know, the market just feels a little tired up here. What your prior guest was talking about breadth of the market, you know, that just screams the market's a little bit tired here short term. But we still think there's 30+% upside in Uber in 26. So we feel pretty good.
Okay. 30% upside for Uber in 26. Well, what is that going to be driven by, Eric?
Well, the app is truly becoming that super app that they've talked about for if you want delivery, if you want groceries, if you want rideshare, if you want autonomous. They're going to keep bolting on more and more services onto the app that keeps you coming back with good frequency. And they know that the more you engage, the more that you use the services, the better gross bookings go, the better profitability. And the stock's still not very expensive, and they have a big buyback, even neutralizing the stock-based compensation. So we feel pretty good about the direction Dara's taken this company.
How it sort of stacks up against the rest. I mean, what is Uber going to say versus, say, what Lyft says?
Versus what?
Lyft.
I mean, two different businesses, obviously. I mean, Lyft is probably incredibly too cheap, but it is a tough thing to compete with Uber on a global scale. So I think there's room for both companies. But, you know, Lyft has moved into the more asset-heavy business of working with Tesla and kind of managing their autonomous fleet. That's much lower margin business. So to me, the game has already been won by Uber. And, I don't see anything changing that going forward.
What's Uber going to tell us about sort of where the consumer is at right now, particularly given what we've heard from, other companies across sort of the travel space, the retail space, the dining space as well? I mean, is this all going to be sort of consistent with that? And also, as far as also an update on some of the autonomous stuff too, what are they going to say about that?
Yeah, I think they're going to say what we've been hearing from all the credit card companies and a lot of the other consumer-based businesses. Consumers continue to be very choiceful, meaning we love certain things, we're willing to pay for those. If we are tightening our belt, and let's face it, 2/3 of the population is feeling the pinch of inflation, and so they're being very choiceful. Uber is just one of those things, whether you're taking the Uber to the airport or from the restaurant, or you've chosen to get some Uber Eats. That is a very key part of people's love and their experience, part of the experience economy. So, other things may suffer, but we still feel pretty good about people's interest and willingness to spend on this part of their consumer spend.
Yeah, and then just on the other part of that question, so I double dipped there. What about the autonomous side of the business?
Well, listen, right now, the Waymo rides have been largely, let's try what this autonomous is about. And clearly, there is major growth off a very low base. But again, this is the place where people will go to decide whether you want a regular ride share with a driver or you want something that's autonomous. I just don't see that changing. And frankly, it wouldn't shock me if Uber finally did a deal also with Tesla when those things are available broadly, because why would Tesla want to miss out on people that are locked into Uber to choose Tesla. That seems like they'd be leaving too much on the table. So to me, I'm expecting that, and that'll obviously give the stock a big boost because it's been something that's held back Uber stock for a while, that risk of autonomous and leaving them out.
Fantastic overview. Thanks so much for helping us get a little bit of a preview of Uber ahead of those report cards and those earnings. Eric Clark, Portfolio Manager of Alpha Brands Logo ETF. Appreciate it. Let's trade it now with Tom White, host of Fast Market. Very good morning to you, Tom. Happy Monday. Your example trade for Uber.
Yeah, Sam, implied volatility levels pretty elevated going into this report. We've got some event risk. The option market priced in at about a plus or minus 6% move either way in the stock. It's pulled back from those all-time highs just below 102 that we saw just over a month ago. So maybe some more upside, but maybe taking advantage of the vol levels between different option series. So that's a strategy I looked at. Looked at a really short-term position, call diagonal that's bullish in this, where I'm going to go out to the November 14th weekly option, so just 11 days to expiration. I'm going to buy that at the money 97 strike call. It's got the higher delta. It's got Vega, right? There's a long Vega type of strategy. Buy that 97 strike call, and then in the near term, November 7th weekly options that expire in just 4 days, we're going to go about that one standard deviation and go up to sell the 103 strike call. So a bullish $6 wide call diagonal. You're going to pay roughly, I've got a $3 debit here on the risk profile. It's probably trading closer to 280. The stock's pulled back a little bit with the market. But the debit you pay is going to be your risk on this position. So if you pay $3, you got $300 in risk. Now, where do you start to profit? Well, anything above about $99 is going to be profitability on this trade. So on a percentage basis, you don't need that big of a move to get above that break even. Now, on a $6 wide call diagonal, you're only paying less than half the width of it. And that's because you're buying about a 55% implied volatility level in that October or November 14th weekly options, where you're buying the 97 call, selling about a 78% implied volatility in that near-term option, where you're selling the 103 strike call on aggregate. So that vol dispersion lowers the price entry point in this. You will have that opportunity to roll or adjust that short call, but you definitely need to move to the upside, setting up with about that one standard deviation move if the stock can hit fresh all-time highs post-earnings.
All right, good look at Uber there and an example trade for us. Tom White, thank you so much as always. I really appreciate it as we look ahead to that all-important report card out tomorrow before the bell. It is a very, very busy week once again here.